You know, you talk about it being like your holiday season when you acquire the most new players and reactivate large portions of your player base. But you also say that right now, you know, you want to continue to be a bit cautious about the NFL season. Why is that?
Well, it's just such a big sport that has such a material impact on our numbers that, you know, like everything we do, we want to see a little data before we start making any sort of assumptions that might end up proving to be off. And last year, we just saw such a strong customer acquisition and activation and retention. You know, everything was up last NFL season at record levels. So, you know, it's also a bit of caution saying, wow, that was so good. Can we really top that or even repeat that again? And I hope so, but we'll have to see.
Yeah, well, so what kind of data will you be looking at when it comes to that? I mean, is it about just everybody being back in stadiums? Is it sort of a return to normality, or are there other things you're going to be looking at?
Well, we'll look at our data. So we pretty much know how the season's going to go after the first week or two. It's remarkably predictable. You get that kind of first week or two of data, and everything from there is pretty much, at least in past years, been right on where we thought it would be. So we'll know pretty early on how things are going to look for the rest of the NFL season.
Right. Now, you say, of course, that you've seen no discernible adverse impact from the reopening of the economy. So is that going to be a new normal for you? People aren't staying home anymore, but they're still going to be continuing to do the things they were doing when they were at home on your platform?
I certainly hope so. I mean, you know, one of the nice things about the world of mobile that we live in and such a high portion of our traffic coming on the app is people have the app with them everywhere they go. So, you know, I think as long as we continue to provide great experiences, our customers will stick with us, and that's what we're focused on doing. But, you know, also the reality is that there's a lot of things that we know are going on here, and it's hard to disentangle them between reopening, momentum in the industry, new product features that we're adding. So, you know, it's really hard to know what's driving what, but I think as long as we keep doing a good job with the customers, we'll keep seeing things go in the right direction.
Yeah, Jason, to that point, it's Morgan. I mean, we keep hearing that we're in early innings in terms of sports betting as more states continue to move to legalize and more opportunities for business, more customers. But in a week where we see Caesars putting more money towards its own initiatives, everything that's going on with investments and acquisitions over at Penn, for example, as well. I mean, the landscape in general, it's getting more competitive, presumably greater marketing spend. What does that mean for your company?
Well, I think it first means that we're in a pretty exciting industry. You know, people aren't investing because they don't see the large opportunity. They see it. And I think you have to expect when you're in a new industry that has a very large TAM, there will be lots of competitors going after it, and they're going to do a great job, and we're just going to have to do a better job if we want to outcompete them. I'll also note that for the last 2 years, we've heard very similar things. Each time going into NFL season, wow, what do you think about all this new competition emerging? And we've continued to do very well against our numbers. We've continued to see strong customer acquisition. So I think we feel if we just keep doing our thing, everything will work well. And in many ways, new competitors coming in and spending will just help grow the overall industry, which is good for everybody.
But will your thing include increased marketing spending?
We're not really spending based on what our competitors are doing. We look at our own LTVs and our own desired payback periods, and we let the data do the talking. So we think that's the best way over a long period of time to build a sustainable competitive advantage, to have the best CAC to LTV ratios and the highest scale. And so that's really what we're focusing on continuing to build, and we're not going to change our strategy based on what competitors are doing.
Kind of along those lines, Jason, in terms of customer acquisition, I wonder where your head is right now in the amount of play money that customers have to gamble. It's a dynamic that we certainly watch when we think about retail participation in stocks. You know, savings rate has come down, stimulus checks are ending. How does that play into the overall model?
Well, that's one of the things that we're looking at as potential headwind, but, you know, we haven't seen any adverse impact yet. So I think that it could be a sign that there's just still a lot of room for customers to spend on our products, and we haven't really tapped that deep. So I think if that's the case, we'll see continued momentum, and we're certainly hopeful. And we also need to just keep innovating on product. You know, we're not competing just against the other gaming companies. We're competing against any discretionary entertainment spend. And I think there's a lot of money in that pool. And if we can give people a better experience than any other thing they could be doing with their discretionary money, then I think more and more people will choose to spend it with us.